Thank you so much for staying with us on the front burners. This is the policy discuss segment, and you know what happens here: critical issues that concern policies that shape the economy, that guides businesses, are analyzed on this segment. And today we're going to begin looking at the Nigerian stock market. What is the outlook for the Nigerian Stock Exchange for the year 2025? To do this with us, we have a guest, Gbenga Magbagbeola, who is a chartered stockbroker and a managing director at Sycamore Investment and Asset Management Limited. He joins virtually. Good morning, and thank you for joining us.
Good morning. Thank you. Thank you for having me.
The Nigerian Stock Exchange has been giving Nigerians joy. Let me say it that way, because when something good is happening, people say, I'm happy about this, I'm delighted about this. It's been giving Nigerians joy for quite a while now. Let's even look at the year 2024. In the year 2024, the Nigerian stock market the Nigerian capital market surpassed Argentina, which it was trading behind. It also became one of the best performing capital markets in the world. And it ended the year 2024 being among the top 4 performing in Africa. How do you respond to that?
Yes, I mean, you're very right. So the Nigeria stock market performed incredibly well. But I might just add that in local currency terms, it was one of the best performing in 2024. The key drivers were generally the resilience that investors were able to observe from the performances from the banks, as they go through their capitalization, also from even the consumers that have been plagued with challenges with high inflation, cost of goods, cost of operations, cost of borrowing from banks. The FX instability as well, kind of plagued the market. But those companies, a lot of the companies, especially the established blue-chip companies, were able to weather the storm, and investors generally rewarded those companies, and that saw that result from the years they performed. I might also add here about the numerous reforms that investors are generally watching out for. Things like the closing of the naira, the exchange, also the removal of fuel subsidies, which generally investors have been looking at all the drives on the Nigerian economy. So those things, those factors came together to generally give investors some level of confidence. We're seeing a very good recovery, spilling into 2025 already from the year-to-date performance.
Okay, let's look at what the projection is for the year 2025. So the market's capitalization of the Nigerian Stock Exchange is projected to reach 51.46 billion naira in 2025. Some other experts have also said there will be a 25% increase, 25% incremental growth in the capital market this year. Do you think that's overambitious? Given what's happening in the Nigerian stock market, how 2024 was much of a bullish season for the market, do you think these projections are right?
I'm not surprised about these projections. They are the market is generally again. I mentioned about forms that the current administration back very bold, investment. So it was a case of increased confidence last year, and most of the activity that market came from domestic investors. Now in 2025, we're seeing a more diverse discussion from foreign investors who in the last 2-3 years have stepped back from Nigerian market. Now they're participating. We're seeing a lot more involvement. So that adds to the level of activity, level of demand for Nigerian stocks. That's a positive. So I'm not even those projections are very in line with my thoughts as well, how the market will perform. What supports this thesis is also the fact that the full-year earnings that have been coming out in the last 2 to 3 weeks have been very decent and very positive, generally speaking, from consumer news. Even from the banks, they were reporting very, very good results, and just shows that these companies are doing well. And in a year where funds are expected to consolidate, gains from FX floating instability that comes with it is already showing up. The naira has been stable in the last 2 to 3 weeks around 1,005, the fact that naira strengthened and also remains stable is a positive sign. It's very positive sign for a lot of the companies that struggle with exchange volatility in their operation. So this year is going to be looking like a year where those policies will consolidate, and a lot of the companies that are listed on the NGX will benefit from the positive economic environment. Nigeria market is very resilient, so those projections are very well aligned.
Thank you for joining us this morning. How resilient is this market where we see that the growth happens only in a very limited sector, especially you find that growth in the financial sector and in the oil and gas? How resilient do you think that market will be?
There is still the downside risk, as you are rightly pointing out. The downside risk being that for one, the level of demand is high cost of living, especially when we hit some other sectors that depend on aggregate demand in the economy generally. As you said, the financial sector has been the main growth driver for the Nigerian economy. So there's no surprise there that things are resilient in that sector. We expect things to continue to grow. The oil and gas sector is growing, given the policies around the, addressing security challenges with our oil production, addressing investment issues. We've also seen some investment activity or some more attention that is being paid by the federal government to the agri sector. Also, with the participation of the private sector as well to inject fresh activity, fresh levels of involvement from different players in the agri sector. The consumer space, particularly, which also forms a very large part of the NGX in terms of the number of companies that are listed there. If you look at it from a technical point of view, will benefit from a stable FX environment and a declining pace of inflation. A declining pace of inflation means that the cost of borrowing are also likely to start to come down. Those are positive signals for that sector, the consumer goods sector, the manufacturing sector, that generally struggled, in the last few years. So these are the reasons why I feel that going into 2025, the investment and economic climate is shifting. Obviously not where exactly we want it to be in terms of how rosy we'd like to see it, but things are looking better than last year. And as I mentioned about the FX situation, that's one clear area to look out for. The more stable the exchange rate is, and the more the naira strengthens, following all of the CBN intervention and policy, these things tend to trickle down into the company's performance and operations, and help them to grow and to be amongst the toast of the rest of them. So the resilience from my part, from my view, is expected to broaden out from the services and the oil and gas into other more nuanced sectors like the consumer and manufacturing sector.
Thank you very much. So I want to take you to a terrain where we look at budget performance and tie it to the Nigerian capital market, and also how this translates to the positive in business in the businesses that we have in the country. For 2024, it was said that the Nigerian government implemented about 43% of the 2024 budget, and if we're to assess the budget performance, it is less than 50%. How did that impact the Nigerian capital market?
That goes without saying. Analysis is very stark. The reality is that an underperformed budget obviously does not go very well on the market. The level of budget performance clearly indicates that there was a lot of potential that was left behind in 2024. Unfortunately, Nigeria has a track record of very low budget performance. Just part of the issue we're talking about from political risk point of view. Um, Again, what that means is that if the government is able to build on this on the previous year performance level, which despite the fact that it was project performance was low, the markets and the companies listed on the index were still largely resilient. Building from that level and they're able to achieve a more significant budget performance in 2025, then we should expect that a lot more positive level of activity will filter into those companies. Like I said, I like to use the consumer goods sector of the capital markets as a fair gauge of aggregate demand. Um, Once there is government spending, once there is investment from the government in terms of how the budget is implemented and the performance of the budget, we will see a lot more trickle down effect and increase in demand, and that helps those companies that are participating in that sector. So again, just like you said, the downside risk again, in fact, that Nigeria has a track record for budget and performance. But what I'm trying to say is that that leaves the fact that leaves is more like leaving food on the table. There's a lot of potential that can actually filter into the market. But again, that's the risk. If the country or the federal government again shoots too low, and there's a real risk there, then I can just see that companies will struggle in 2025. Again, that's the downside risk of any market or company.
I still want to look at the issue of the growth of the capital market in Nigeria with a population of about 200 million people. And we just have about 151 companies listed on the Nigerian Stock Exchange. Is it that the rules for listing are too stringent that a lot of blue chip are not participating in this market?
That's a very good point you mentioned. That has been an issue that the Nigeria exchange, has been faced with over the years. There have been more on net. There are more companies that are even leaving the capital market than are joining to get listed. I'm aware. I mean, as a stockbroker, I'm aware of some things that the exchange is trying to do to make things more lenient, to attract even growing companies and young startup companies as well. Those are happening in the background. Despite that, the economic environment, which you cannot discount, is pretty challenging for those companies, even established companies. We find that, and let me speak directly to the Nigerian market. Um, One thing I know that has cut across a lot of issuers, a lot of companies who are listed, generally complain about in terms of the challenge is that the valuation of the business is generally falls below what the analyst fair value is for the company. So meaning what that means is that there's a lot of the level of liquidity in the market to some extent might not support the sector. Just like you said a few minutes ago about the fact that the financial sector has been the key driver and has been doing well. Most investors are generally comfortable with financial sector, the banks, and then only after looking at the banks, now take a look at other sectors. That has the implication of impacting the value of those other sectors. Now, if a company is listed and they generally feel that my valuation, my market cap, does not align with my book value to a reasonable extent, they might be tempted to start to think about alternatives. So those are some of the things that are plaguing, along with some other things. But I know that the exchange um, is doing a lot of things to try and make it more conducive and attract even young new companies into the market. But again, like I said, the overhanging um, investment and economic climate makes that takes the ball out of their court. cost to a very large extent. I think personally that by the time we start to see more improvements in the larger economy, um, for example, in cases of in those policies around interest rates when they start to become more favorable for a lot of companies, when the growth, the real growth for the Nigerian economy is significant to actually drive meaningful progress for the people and even touch lives, then we'll start to see more natural influx from these companies to the team. As you rightly pointed out, the number of companies that are listed are, very, very low and hasn't changed much for a very, very long time. And that's a huge challenge.
Let's look at the way the market started this year, 2025. So there was a report that tradings at the market started on a very strong note, even as investors adopted cautious trading. Could you speak to the market sentiment currently? Are there policies that are driving market sentiment on a favorable note or on a negative side?
Yeah, that's a great question. So generally, in January, in early part of the year, there is general positive sentiment from the fact that investors, just for a purely trading point of view, investors position ahead of full year dividend declaration. So we saw some of that play out as the year started. A lot of investors were taking position in some of those established companies that pay steady. That was factored in. There was also the fact that, from the beginning of the year, we started to see that the exchange rates, which a lot of investors watch, to see the impact on some of these companies that depend on foreign exchange for their businesses, um, was also stable, and the naira was actually strengthening. If you recall that some of those companies, a lot of those companies recorded losses as a result of currency devaluation on their books. Um, a stronger naira and a stable exchange is a very, very positive sign for this company. And those companies were rewarded by investors pouring money into a lot of those sectors, particularly consumer, also this one, financial services. So, also, I mean, I might just mention as well the recent rebasing of the inflation rate, and that was also factored into the way things played in terms of the outcomes, because first of all, from an economic point of view, lower inflation rates generally means that CBN has to reassess its stance on monetary tightening and its monetary position, and with the inflation that was expected to decline, a lot of investors were also positioning ahead of positive attention from the larger market in the stock market. So the 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 changing positive economic climate was also factored in, and we've seen that the market has gained about 4% from year to date, which is very decent, very much higher than other markets that are doing well globally. My view is that going forward, the outlook is also still very positive. As I mentioned, that a lot of those companies are resilient, and the economic conditions are also improving for the operations to see the benefits.
Okay, thank you very much. No, recently from 2024, from the last quarter of 2024 to 2025, there's this observation that was made by market experts concerning the purchasing power of not just the Nigerian naira, but the purchasing power of the average man on the street was drastically affected. And this in itself has affected production, and you are quite aware of how we experience food inflation during the ember season, and currently now as we speak now we still experience some sort of food inflation in it. This has affected production. How does this impact the capital market and the capital market outlook for 2025?
Yeah, food inflation, when you look at the inflation story in Nigeria, has been one of the key drivers along with energy prices. So food has been up almost to 40% in 2024, 40% doesn't even tell all of it. So a lot of food items that common man buys was up over 100%. So it was very painful. It's still a very hard situation in terms of inflation in Nigeria. However, from a policy standpoint, um, inflation is a year-on-year comparison, and coming from a high inflation base from last year, and even looking at the rebasing that was done, which is exactly has the same effect from looking at a base year where prices were already high, comparing it with the current year. There is expectation that inflation will be going to start to fall. Aside from the statistics of it, in real terms, most food, the real inflation of food items has started to taper a bit. Now, the implication of this for these companies, from the to look at it from the aspect of the common man, is that there will be a shift towards everyday consumers will have to look for alternatives that are cheaper, alternatives to what they would normally buy. The normal households, fast moving consumer goods companies will have to deal with consumers shifting from their normal staple products to other things, to other even more local and locally produced products because of the FX impact in inflation as well. So that's a real concern for those companies who actually service that segment of the economy. But as I said, inflation is on a downward path. Most analysts will agree that in 2025, the inflation rate in Nigeria is expected to start to taper down to the low digits 20. Um, so on the back of that, we expect that in 2025, again, the investment environment, the economic environment from an inflation standpoint is going to start to benefit those companies that the previous year they were really struggling servicing that aspect of the economy. Now, just to draw back and illustrate a bit about the consumer goods sector. The consumer or individuals who normally buy staple consumer materials like soap and food and things like that had to substitute for something cheaper, something made locally, will just mean that the company who's producing that product obviously not steal revenue or sales from that particular product. They will need to be ingenious to try to source raw materials locally to try to pricing, which will also impact the revenue as well. But with increasing or improving spending power of the consumer, they might now have the wiggle room to re-enter the market. You might see a bit of relaunches, a bit of more aggressive marketing, and that might have the effect of helping to revenue and bottom line.
Going a little specific, the bubble of 2008 seems not completely out in the market because there's a whole lot of suspicion by investors participating in the Nigerian Stock Exchange. What do you think NGS can do to boost investors' confidence so that people can again begin to participate, knowing that there are huge returns? That's one. Secondly, recently we also saw that NGS suspended trading for a particular stock, and investors seems to be in abeyance and don't know what to do. And that stock is not trading, but is value plummeting on a daily basis. What's your advice to people who hold such a stock?
Okay. No, from the NGX point of view, thank you for that question, sir. I think it's a very relevant question because there's a segment of the Nigerian investor space that generally have their hands gone. I was also actually doing that bust 2017, 2008 up to 2019. But what I would like to say about that is the fact that, first of all, the NGX needs to do, a bit more to highlight the improvements that are happening. I know that I'm aware of some of their activities, but there needs to be more targeted information distribution out there about exactly what changes have happened in the exchange. For example, some of the rules that allowed the market to go into downward spiral from a technical and trading point of view. A lot of those rules have been tightened and amended, to adjust the market. So one example I usually like to give is the um, is the limit trading limits on a daily basis. Those rules, some of them were there 2008, but they were not strictly being adhered to. So you could see that stocks would go up to 20%, in a particular day up, and they can actually, drop with the same magnitude. And there was a bit of it was a bit chaotic, So from a technical point of view, those things are now more orderly. A lot more has been done to put those rules and enforcing these rules, even from a technology point of view. The stock market cannot even go more than 10% in either direction on any trading day. Um, that gives some guardrails around, how much movement the stock can actually move in a particular day. So I think some of these things need to be um, disseminated a bit more, just to let people know the changes that have happened, to put the level of confidence of some of these investors who have been negatively impacted in the past. On the point about suspension, I know that the exchange usually sends out information about such suspension. Again, I would advise that investors speak to their stockbroker, speak to their fund manager or financial advisor about any particular name that you're interested in. Sometimes the information is out there, but because generally it's not your duty, it's not your job to look at this thing. You probably are just not aware. Um, there are rules about suspension. It takes some steps before it gets to that point where a company is actually suspended from trading. Speak to your financial advisor. They might be able to advise you about pending issues that some companies are having and things like that. So that might help to a very large extent, so that investors don't just go blindly into stocks that they just feel that they like, but with more information about it. So it's an information situation. I think the NGX needs to do more to uh, enlighten the investing public, and also investors also need to um, you know get help, get advice from um, experts who are actually looking at these things and with the regulator. That will actually help with that information facility.
Let's look at trading for yesterday. So, after the trading for yesterday, it was said that there was turnover increase of 8.01%, and despite a decrease in volume, suggesting that while a few shares were traded, the value of the stocks of the trades were higher, indicating a shift towards higher value stocks or increased institutional interest. And even for those higher value stocks, investors have been warned that some of those stocks may be, it may be overbought and there may be some correction. What do you say to that regarding the trading of yesterday, and what do you think is resulting in some stocks becoming higher trading stocks and in the advice of corrections later?
Right. So, I mean, my take on trading recent days from yesterday particularly, if you look at the market, the market actually declined 0.2%. So there's been profit taking, and probably some rotation to, like you said, high cap blue chip stocks. Um, Investors generally are more comfortable with these established companies that generally tend high value, blue chip companies. Some of them fall into the oil and gas service space. My view is that, like I said, now that we're having more diverse investor participation, the point about Nigerian assets and Nigerian stocks being relatively cheaper to their global peers now becomes apparent. So even though the market has rallied quite a bit, despite a few days of profit taking, the value of most of the stocks on the NGX compared with other exchanges globally that are trading in line with what the Nigerian market is actually relatively cheaper. and that becomes more apparent with more participation for a broad spectrum. So I think that I mean that point is just to address the part about investors chipping into these stocks, whether or not it's becoming riskier for them. Not downplaying the fact that there's always risk in the stock market, but there is also positive headroom for these stocks in the market. But always expect that, by the time the stock hits 20-30%, there will always be investors who are going to take profit off the table and have a bit of correction, for example, before things normalize again and start to move. So that's a normal feature of a thriving stock market. So there's nothing. I mean, from my view, what's happening is a very natural thing to happen. There's profit taking after prices have moved or appreciated quite significantly, and then investors are rotating to other sectors that feel more are more stable, probably to be more resilient going forward. But on the whole, the Nigeria exchange, when compared to global players, is still relatively cheap in this current environment that we're in. And by that I mean a positive looking outlook for the exchange rate, which makes it very favorable for international investors to also come in. So that's my view in terms of the outlook for Nigeria.
Much. Lastly, for me, I would like to ask, since the inception of this administration, when the MPR, the Monetary Policy, the MPC, Monetary Policy Committee of the CBN, when they meet, we've been experiencing an upward trajectory of the increase in the rate of the MPR. And for Kenya, recently when they met, they were contemplating of taking it down, theirs down. How does this impact the foreign market, and how can retail investors, navigate the market volatility in Nigeria?
I'm sorry, come again with your last.
Yes, my last question is, how can retail investors, navigate the market volatility in Nigeria?
Okay. Yeah. That's a really good question, because again, the retail investor in the market is growing significantly, very, very likely compared to legal institutions and other sort of. So that's important. I think that retail investors generally should, in order to try to mitigate fluctuations of volatility, need to look at strategies to consolidate their position over time. Thing that an analyst will tell you in the market is to have a long-term view. I think so. I think that's a good advice as well. When you're in the stock market, it's a long-term investment market. If you have a long-term view, it also helps you to pick quality companies that are doing well for the long haul. That way, when there's volatility, price movement from various factors that are generally not even reflective of the specific company performance, you generally are not really shaking about what's going on. Have a long-term view. That's my first advice. And secondly, have a strategy to buy stocks for the long haul, thereby averaging, bringing down your average entry price in any particular sector. That will give you the effect of, in the long run, your average cost of investment is going to be lower than the market rate, going market rate, and you'll find that you're able to think about when the market is actually down, and just know when the market is up, or maybe when the market is just on an even kill. So having that strategy will help for retail investors, which is to average down your entry levels, and also to have a long-term view in stocks. Of course, I would also tell you that if your stock hits your target, your price target, for example, you made enough profit that you started in mind with, obviously you should take some profits off the table. Don't let greed, rob you of much earned profit. That's something I tell retail investors as well. So have a strategy, stick to your strategy, take your profit when you have them, have a long-term view in the stock market, and you're very likely to win.
Thank you so much. Gbenga Magbagbeola, we thank you so much for being our guest here today and talking with us on the Nigerian Stock Exchange Outlook 2025. And we hope that the Nigerian Stock Exchange can actually even surpass the projections that have been made, and the economy will be stronger for it. Thank you so much.
Thank you for having me.